Good morning. This is Ed Meisegland, managing partner of Indiana Business Advisors, where we help small and mid-sized business buyers and sellers. Um, Today, there's probably no greater time in probably most of our lives where we need the small business administration to come alongside small business to help them through this crisis, this coronavirus mess that we find ourselves in. So today we have Eric Armacost. He is the lead lender relations specialist um, of the Small Business Administration, and David Watkins is the acting state director of the Indiana Small Business Development Center. So those guys are going to come on, and we're going to talk through what's available for small businesses to help them survive, and then once they get through that, how how do they take those next steps? So, couple housekeeping items. This is being recorded in two places. One, we will make the entire webinar presentation available, and number two, it's being recorded for our podcast, Defenders of Business Value, and it too will be pushed out later today. So, Eric, why don't you go first and give a brief introduction of you and how you're going to help us get out of this?
Good morning, Ed. Thanks very much for having me on this morning, and thanks everybody for dialing in this morning. If I could have the next slide, please. So, as Ed mentioned, my name is Eric Armacost, and I'm the lead lender relations specialist for the United States Small Business Administration here in the Indiana District Office. The Small Business Administration, or SBA, is a cabinet-level agency of the U.S. federal government. So up until about a week and a half ago, I and my team spent about 90% of our time working with commercial bankers and business bankers to help them use SBA's core loan programs, the SBA 7A and 504 programs, to help them use those programs to make loans available or make capital available where otherwise it would not be for small businesses in the state of Indiana. So like you, we're also learning about SBA's disaster response. We've spent the last week and a half ramping up to the greatest extent possible. I'm here today to talk with you about the resources that are currently available. And I know that everybody has a lot of questions about proposed legislation that's underway right now. And I understand that the CARES Act, or the Coronavirus Aid, Relief, and Economic Security Act, has passed the Senate. But to be clear, that's passed the Senate. It still has to get past the House of Representatives and be approved by the president. And none of that's happened yet. So that's all still in the works. I mean, I have some questions just like you do about what's actually going to come down. I can't really speculate on those things that are not in force currently or not available currently, but I'll be definitely discussing what options are available and what resources are available right now. Next slide, please. So right now, as a small business owner in the state of Indiana, you can apply for the Economic Injury Disaster Loan. That's a direct loan from the United States Small Business Administration. There are some eligibility factors that come into that, but I will say that a lot of those criteria have been relaxed. If you've not already applied for the Economic Injury Disaster Loan, or their shorthand, or the term of art used as EIDL loan, if you've not already applied for an EIDL loan, I strongly encourage you to do so as a small business owner, even if you're not 100% sure that you're going to need capital now. We don't know when this crisis is going to be resolved, and the application process is going to take some time. As you might imagine, there are a number of folks that are interested in getting support, and what shape that takes, what form that takes, and the timing of that are still very much in question. I would encourage you to go ahead and start this application process. You can always decline to accept the funds later down the road if you have a better option that becomes available, or you discover that you don't need to take out a loan for your business down the road. Next slide, please. Okay, so the Economic Injury Disaster Loan is a loan. So there is a credit history aspect of this. I can't tell you exactly what the credit criteria that the Office of Disaster Assistance is examining when they're offering these loans, but I can tell you that the credit approval level is lower than conventional lending standards. There does have to be, however, the reasonable expectation of repayment of the loan. And as a borrower, you'll have to meet certain eligibility criteria. Now, unlike our core loan programs, in this case, it does include some larger businesses, and it does include a number of nonprofits. So again, if you have an organization and you're not sure that you're eligible, the application process is not incredibly difficult. If there's a question about your eligibility, I would encourage you to apply. It won't take you that long to apply, and at least you'll be in the queue to be considered for funding it down the road. Next slide, please. So how much can you borrow under the EIDL loan, the economic injury disaster loan? The maximum approval amount is up to $2 million. So really not everybody's going to qualify for that. There has to be, again, the reasonable expectation of repayment for this loan program, but the maximum approvable amount under this one program is $2 million. Interest rates for for-profit concerns is 3.75, and for nonprofit organizations it's 2.75. And these loans can be approved for up to 30 years. So it's a 30-year term at a relatively low interest rate. For the most part, those payments are very reasonable. And in fact, the terms are typically set based on your historical ability to repay loans and will be considered on a transaction-by-transaction basis. The other thing I want to point out is I've got a lot of questions from applicants who have said, well, I've applied. There was never a place where they asked me how much I wanted to borrow. And that's because essentially the underwriters are treating this now somewhat like a credit card application, in the sense that they're going to approve you for the max amount that you can be approved for, and then you can simply decline to accept the full amount if you want less than that. So if you want the full amount, you take the full amount. If you want less than the full amount that you're approved for, you are welcome to take less than that. And the other question I get is, well, can I use this to refinance my existing debt? And the answer is mostly no. So if you have an existing loan that maybe has less than favorable terms, maybe you should reconsider that refinancing that loan. That won't happen with the economic injury disaster loan. These loans are meant to be used to help you with your short-term cash flow needs. So if you have payments you need to make on a loan, yes, we can use that. If you have payroll, yep. Accounts payable, yep. But refinancing debt or buying new capital equipment is a no. So again, working capital and current payments. Next slide, please. So what are the collateral requirements? So a couple of things I'm going to go into on this. Number one, essentially for any loan over $25,000, the SBA is going to seek whatever collateral is available until the loan is fully secured. And that's going to mean all the fixed assets of your business, any trading assets of your business, and if there's still a collateral shortfall compared to the loan amount that you're borrowing, they're going to look for personal assets to secure that. Typically, that is a first, second, 12th lien on your personal real estate. So the other part of this is that if there's not collateral available, there are several businesses that we support that don't have a lot of fixed assets. One that comes immediately to mind, or like an insurance practice, or even a medical practice that's renting a facility instead of owning. There's tremendous intellectual property there, but there's not fixed assets there collateralized. A big collateral shortfall is not a reason that you'll be declined for application. Next slide, please. So what kinds of businesses can apply? As I alluded to before, it's basically everybody at this point. The S in SBA does stand for small, and so there's a size standard that's applied that's currently under review. Again, that's speculative. We don't know exactly where that'll wash out. Right now, the standard is, basically driven by your North American Industrial Classification System code, your NAICS code. For the most part, I think it's something like 94% of the businesses in the state of Indiana qualify for SBA support. But if you're a large concern, you probably have a fairly good idea of what that is. I would encourage you to go to sba.gov/size, enter your North American Industrial Classification System code, and there's actually a searchable database that'll tell you what standards apply to your particular industry, and you can see if your organization meets those standards or not. So the next bullet point on this slide is kind of not applicable because typically disasters happen in a constrained geographical area. In this case, this pandemic affects the entire country, so we can skip that bullet point. Next slide, please. So the other question I get is, well, what banks can I go to get this loan? And the answer is you don't. The Economic Injury Disaster Loan Program, and again, this is one facet of the response to this outbreak. But this specific program is a direct loan directly from the SBA. To apply, you simply use your favorite web browser and go to disasterloan.sba.gov. I've also discovered if you use your web browser and just search direct SBA disaster loan, your search results will include the application portal. There's also a ton more information about this program and other programs that the SBA offers on our website. A couple other points to raise here. There's no SBA fees involved with these economic injury, economic injury disaster loans. So there's no SBA fees involved in this. However, if we are using real estate and there's the need to file a lien, there's going to be a lien filing charge, or if there's some other third-party fee that comes into the underwriting of the loan, there will be third-party fees. They're not used to enrich the SBA programs at all. They're simply used to offset the cost of actually putting the loan in place. So just transaction costs. There's also no obligation. As I mentioned before, if you're approved for this loan and you discover that either you don't need the loan or there's a better program that's been rolled out since you applied, you're welcome to decline this loan and move on to the next thing. In terms of collateralization, if you have a loan amount of $25,000 or less, there won't be the need for collateral. You can always offer it, obviously, but at 25 or less, you won't necessarily need to provide any. So if you have an existing disaster loan, which of course, unfortunately, Indiana experienced some unfavorable weather, particularly for folks in the agricultural industry, and then that caused some issues. There's also been flooding and some other weather-related disasters that were enforced prior to the coronavirus outbreak. Having that disaster loan does not make you ineligible for the economic injury disaster loan. In fact, you're totally eligible. So the other, go ahead, next slide, please. The other question that comes into play with respect to collateralization or securitization is personal guarantee. And the short answer is yes, there is personal guarantee required for the economic injury disaster loan program. And again, I know that there's speculation that there's going to be the elimination of a personal guarantee on some loan programs. That's not enacted yet and does not apply to this loan program. So if you're a 20% or more owner of your business, a personal guarantee is going to be required. So the basic filing forms, and again, this information is available at disasterloan.sba.gov, but essentially there's just a very truncated underwriting package that has to be submitted on that portal at discuss disasterloans.sba.gov. You'll discover that there's an SBA Form 5. Now, that form is generally for LLCs, corporations. If you have an S corp or a single member LLC, there's a supplemental form called a Form 5C. And that's actually the form that you're going to use. That's spelled out on the website, and essentially you'll also notice that some of these documents appear to apply more for individuals. Please keep in mind that the disaster assistance programs are meant to cover businesses and individuals both. So if there's a hurricane, the SBA supports business owners as we do in our corporate loan programs, but also homeowners whose homes have been destroyed. So some of the documentation can be applied to either single member LLCs, sole proprietorships, or in the case of other disasters, not the one we're in, but other disasters, can be applied to individuals. So the other thing that I need to point out is that there is going to be a verification process with the IRS. There's IRS Form 4506T that has to be completed and submitted so we can verify the tax information we have is true and accurate. I will be fair and say that the IRS has been overwhelmed with these applications. So there is a little slowdown at the IRS getting the tax transfers back, and that is a choke point in the current application process. We're working with them to help them streamline their process and helping to kind of get that speeded up to the greatest extent possible currently. We will need your last year's tax returns. If you haven't filed 19, what we'll need is your 2018s plus interim financials. Your schedule of liability will be reported on SBA Form 2202. This, in fact, is just sort of lays out your current obligations and will spell out your total liabilities and then your monthly obligations, and then a personal financial statement, which is essentially a personal balance sheet, which lists your personal assets and liabilities. For your particular request, there may be additional documentation that's requested, but this is the core information that's going to be required. This can be submitted in two ways, or actually really three ways. Essentially, the portal that's there at disasterloans.sba.gov, you will fill out an electronic version of these documents, and then they are uploaded directly there. That's one method. You can also email these to the Disaster Loan Customer Service Center. Again, their website's on their web, or correction, their email address is on their website. It's disasterloans.sba.gov, or you can mail them into the Disaster Loan Center. The address is given later in this slide deck in Fort Worth. Next slide, please. So additional filing information that may be requested is if you have a very thick tax return, again, you're going to need schedules and that sort of thing. You have to be able to verify, if you're asking for $2 million, that your sort of normal operations or normal business operations would lead to that sort of profit, that sort of revenue. You have to substantiate the request by looking at your historical cash flow, essentially. So in some cases, too, we'll require SBA Form 1368. This is your monthly sales figures. Again, this goes back to substantiation of your request. Next slide, please. So there are a couple of business types that are not eligible for the Economic Injury Disaster Loan Program. And there's a lot of confusion about this. I'll try to be as clear as I can on what we know at this point, what is eligible and what is not eligible, specifically farms. And in Indiana, that's a big deal. So there's a lot of small family-owned farms that are hurting right now, just like a lot of other small businesses. Unfortunately, they will not qualify for the Economic Injury Disaster Loan Programs solely for their commodity production or their crop or livestock production operations. However, if they are a value-added producer, so you're not just milking cows, you're making cheese. You're not just growing apples, you're making applesauce. If you're a value-added producer, and if you are, you'll know, then you would qualify for that aspect of your operation. So in pork farming, livestock, and grain production is not eligible. Value-added producers are. Religious organizations are not eligible for support under the Economic Injury Disaster Loan Program. So we get a lot of questions on this. What if it's a child care? And the answer is maybe. I would suggest going ahead and applying. So the core church operation would not be eligible, but affiliated operations with the church may be, depending on how that organization is structured. The same is true for some charitable organizations, although just kind of briefly, I would say most charitable organizations can qualify if they're 501c3s. We've seen more questions on charitable organizations that are structured as 501c6s. Also, no gambling concerns, as you might imagine. Casinos and racetracks are also out. So, this kind of goes without saying, but anybody that's involved in any kind of illegal activity, it won't be supported. So in Indiana, it's not such a big deal, but in states where recreational or medicinal marijuana is legal in the state, it's still not legal federally. Those businesses are not eligible for support through this program. Next slide, please. So I've alluded to this a couple times. Again, the way you apply for the Economic Injury Disaster Loan is to visit the website disasterloan.sba.gov. The /ELA that's on this particular page goes directly to the page where they discuss not just what the programs are and how to get the documentation, but actually goes to the application portal. You can also download paper forms and mail them to the 14925 Kingsport Road, Fort Worth, Texas address is listed on the slide. I also want to point out, I failed to do this earlier, any place in this slide deck where you see blue text that's underlined, that's a hyperlink. If you click on that when we're going to have the slides emailed out to you, if you click on that hyperlink, it'll actually navigate you directly to that additional resource. So it's just something handy to have there. In addition, I've tried to answer a lot of the questions that I can, and I'll continue to answer questions as we go live in the Q&A section. I can assure you I'm not going to know the answer to every question. So there is a customer service center that focuses solely on the Economic Injury Disaster Loan Program. So if you've got a question about your specific application or where your application is in the process, that sort of thing, I can't help you with that. I have to encourage you to call the customer service center, and they could probably shed some more light on that. Next slide, please. So I'm getting ready to tee up my partner, David Watkins, who's the interim state director for the Indiana Small Business Development Center. The Small Business Development Center works hand in hand with the U.S. Small Business Administration to deliver counseling services to small businesses in the state of Indiana. I will say that we rely on them heavily to execute the non-financial aspect of our mission. And with that, I will be turning it over to David.
Thanks, Eric. Appreciate it, and happy to chat with everybody very briefly here about the Indiana Small Business Development Center. As Eric mentioned, the Indiana Small Business Development Center, or what we call the SBDC, is actually a nationwide program. There are 64 SBDCs across the country, and it is a partnership between the SBA at the federal level and the state of Indiana through the Indiana Economic Development Corporation to focus explicitly on small business economic development activities. We primarily do that through technical assistance programs. We've been in existence since 1984 here in Indiana. Most of the time, when we're not in the middle of a pandemic, our services revolve around things like business planning and even valuation and exporting assistance. Here in Indiana, we have 10 regional offices, which you can see on the slide. Each of these regional offices covers the counties that make up their region. Each one is hosted by a higher ed institution. So for example, in Fort Wayne, our office is hosted by Purdue Fort Wayne. In Indianapolis, in the central region, our office is hosted by Butler University. And across the state, except in Evansville, where we're hosted by the Southwest Regional Chamber. Each of these offices employs a team of what we call business advisors, and those business advisors are typically former business owners, entrepreneurs themselves, experts in a given area, who help both entrepreneurs and small businesses across the state. And as Eric mentioned, small business is basically Indiana business. So the exact number, last I saw it from the SBA actually, was 99.4% of the businesses in the state of Indiana are small by SBA's definition. So when Eric is talking about small businesses being the having the economic injury disaster loan available to small businesses, that's what he means. 99.4% of the businesses in the state of Indiana. So as I said, normally we are focused, the Indiana SBDC is focused on helping people start their business, grow their business. We're doing business plan development, helping manufacturers grow by identifying new markets and customers, running market research reports. We work a lot with our lenders and with the SBA office here to help with financial packaging and lender support, and then also exporting and importing. You can go to the next slide. So in a disaster situation, as Eric mentioned, normally disaster declarations involve natural disasters, things like tornadoes, hurricanes. In Indiana's case, we actually have a couple active disaster zones for flooding, and people that have been able to get access to assistance because of the flooding. And the SBDC, as a virtue of our relationship and our partnership with the SBA at the federal level, we're called on to help in those disaster declarations, help small businesses kind of doing what we normally do, but with a specific focus on disaster planning, business resiliency, helping them access things like the economic injury disaster loan, other funding sources as we can identify them. And then at the end of the day, really helping them pivot their restaurant or their business, or adapt their manufacturing line to less workers, or understand what their responsibilities are for allowing leave, or what resources are available outside of federal funding options. And so as for COVID-19 explicitly, in this current pandemic, we have rolled out a number of different things to help the businesses, small businesses of Indiana. The first, and again, like Eric said, these are hyperlinks, so when you get the slide deck, you can click on these. The first is our isbdc.org page, Indiana COVID-19 Small Business. This page, we've been trying to be very, very discerning. There are a lot of resource pages out there right now, and I don't know if you're like me, but some of them can be rather overwhelming. When I open a web page and I see a list of 20 links, and I think, do I have to click on every single one of these to find the answer I'm looking for? And so we have tried to take a very, very discerning approach to listing the most relevant things to as many small businesses as possible. That means that we don't have the answer for everything on that page, but we think that the information that we're providing there is of high value. If you want to know whether your business is small or not, you can go to sba.gov/size. We have that link on our website. We've got the link to the economic injury disaster loan. We've got a link to SBA's lender match program, which helps people find traditional SBA-backed funding, non-disaster funding. We've got a link to local chambers of commerce and other financing that we have been able to identify that different banks and lenders have rolled out specific to their response to COVID-19. We have our resource guide, which you see a little screenshot of there, that goes over not only the economic injury disaster loan, it also goes over other funding options, has a section on business insurance, and some questions, Q&A from the Indiana Department of Workforce Development to go over unemployment insurance and other things that are impacting small businesses and their operations. We also have links to a series of webinars that kicks off next week that we're doing in coordination with Generator and the Indiana Economic Development Corporation. The SBA district office is involved in that, as well as are some of our regional offices, to go over, again, local resources, state resources, federal resources, but also to dive into some of the ways that our small businesses are adapting. You know, the most obvious one that people can see and understand right away are some of our restaurants. They're having to switch to solely takeout and delivery. Maybe they weren't doing takeout and delivery before, or maybe it wasn't as big a part of their business, and now they're needing to do it to survive. We're having conversations with those type of businesses and others about how they can adapt their operations, find areas to collaborate with other businesses, find resources to help them survive, and identify areas where they can smartly and humanely cut back so that they can save as much cash flow as possible. As Eric mentioned, we have been helping a lot of people with the economic injury disaster loan, probably, hundreds of businesses, and that's via webinars like this, walkthroughs, video walkthroughs. We have a guide from the SBA actually that is a step-by-step on how to apply for this loan. We've been doing a lot helping people with the documentation. Obviously, there are the forms, and you all know your name, your social security number, and the address of your business. But when it comes to projections or scheduled liabilities or a P&L statement or trying to get an idea of what your economic injury might be from, say, the end of January to the end of June, that's where we have been helping people put together those financial statements, understand what the impact of the COVID-19 pandemic has been on their business to date and what it might be over the next couple months, because that's an important part of the SBA's analysis in terms of how much funding someone could be able to claim through the economic injury disaster loan. So we've been helping people with that process. And to Eric's point, I would say that on average, it's taking about an hour and a half to 2 hours for the clients that we're working with to complete the application. Now it's changed a little bit in that you fill out the forms and upload or email them versus the online fill out as you go. But I would still say if you have all of your documentation together, it goes a bit quicker. One of the best tips I can give people is get the documentation together ahead of time. Eric's slides contain all of the documents that you know you're going to need. You can download them, fill them out, but make sure that you have those required documentation. One, it makes the application go quicker, and two, when the SBA loan officer reaches out, every time they reach out, it just delays the processing and funding more. So if they say, oh, we didn't have this document, please send it. Oh, we don't have this document, please send it. Oh, we don't have this document. It just becomes this back and forth. So as much as you can provide up front, that makes that loan officer's job way easier to get that loan out the door. And then the last thing that we're helping people on is resiliency and recovery planning. So we're hopeful at the Indiana SBDC that come August, when they've rescheduled the Indy 500, everybody will be back to a somewhat semblance of normalcy. And our hope is that we can help our small businesses get through this current period and on to the next period. As Eric mentioned, there's a lot of legislation and questions and how do I get this, how do I get that flying around at the moment. And as of today, everything that we've presented is 100% accurate. As of today at 9:28 a.m., I should say, because whenever the House of Representatives starts voting, and we all kind of know 8th grade civics here, right? Both houses of Congress have to pass a bill, and then it has to get to the president's desk for signature, and then everybody at the federal level, all the bureaucracy kind of starts analyzing and understanding what their responsibilities are and how they're supposed to be helping small businesses. That doesn't happen overnight. And so as much as we would love to help people get connected to some of the new programs that, albeit I'm excited for potentially coming into being via this legislation, they're not there yet. There's no answer. I don't have any answer for people as to how they can go for this new loan program, because it doesn't exist. Right now it exists on a piece of paper in a congressman or congresswoman's office. So we're trying to help distill that information down for as many small businesses as we can. Next slide. I think we're on to the Q&A.
Okay. Well, I'll moderate the questions and answers. We have a slew of them in the chat as well as email, but I'll go through this one. So what's the difference between SBA loans and the federal bill and grant money available to float payroll and operations? Are these loans forgiven or not?
So this is Eric. I'll take that one. Long story short, right now, the same SBA loan programs that were in place pre-crisis are in place and currently available, with one exception. We've enabled our SBA Express lenders to be able to offer what's called an SBA Express bridge loan. So in fact, what that bridge loan is designed to do is to help provide short-term gap financing between the current need and the long-term belief that we're hoping is going to be enacted shortly. As David alluded to, there's a tremendous amount of speculation about forgivable loans and grants and low interest rate loans and 100% guaranteed loans. And we have the same questions you do in terms of, well, when's that going to be available? It's really up to Congress at this point to take that theory and bring it into law. So we don't have anything right now with the forgivable loan aspect. We don't have any grants right now. Right now we have the products we had pre-crisis with some slight enhancements and the available of gap financing. And in fact, we're encouraging our banks, credit unions, and other mission-focused lenders to make bridge financing with or without us right now, and those funds can then be later refinanced with SBA-supported funding.
Okay. If I do not have any workers at this time, how can I qualify for the loan program? Does this apply to part-time workers?
So I think you're talking about the payroll protection plan that's currently, again, in theory, not in practice. Mm-hmm. They would absolutely qualify for economic injury disaster loan funding. They would absolutely qualify for gap financing from their lender. They would absolutely qualify for conventional lending from a lender, or SBA supported loans to the more core 7A and 504 loan programs.
Okay. What I think you touched on the process for the 7A loans, or just the loans. Can you give a brief overview on the process for the 7A loans under the proposed economic stimulus bill?
So here's what I can say. There are really two channels that funding is going to occur through with SBA support. The first is this direct loan program, the Economic Injury Disaster Loan Program, and that's available through the portal that we've been talking about, and that's been the focus of my conversation so far today. Right now, you can go to your conventional lender, your traditional bank, credit union, or other lender that you're accustomed to working with, and ask them for lending. They may use a 7A loan program to support their lending to you right now. And they may do that on a bridge loan that's intended to be refinanced with more permanent financing later after the crisis, or they may make just a traditional conventional loan to you, and that frankly may still be the best deal for you. Some of the other proposed programs that we're hoping to roll out later will also come through banks, credit unions, and other mission-focused lenders, and not directly from the SBA. So that'll be those same lenders that are going to be able to offer whatever enhanced programs are coming. So I would ask you to stay tuned. When those are rolled out, we're going to train our lenders on how to use those programs. And when those lenders are trained up on how to use those programs, they'll be able to offer you those terms.
And if I might just amplify what Eric said there, talk to your lender, your current lender. Doesn't matter whether it's just a current line you have, a credit line, or some type of financing vehicle, or even just a checking banking account, right? I mean, your current lender, if they participate in one of these programs like the 7A, which existed before all of this COVID-19 pandemic, they'll know. So talk to your current lender, because that's the first place to start. And if the lender doesn't participate in SBA programs, well, I'm sure they can reach out to Eric to figure out how they can participate. And then second, you as the borrower can go to the SBA's Lender Match website, which is essentially like a dating service for borrowers and bankers in SBA-backed loans. So there's a link for Lender Match on our website. You can just Google SBA Lender Match and find it. But regardless of whether it's available now, as of today, at this moment, or whether it's available at some time in the future based on some economic stimulus bill, the starting point on this kind of stuff is your current lender. The starting point for your economic injury disaster loan, that would be the SBA. They lend that money directly. But for 7A loans, 504s, or anything that's kind of coming down the pike, talk to your lender. You should be talking to them anyway, because they may be more than willing to work with you on deferment of payments, or forbearance, or even a new financing vehicle to help you get through this. So talk to your current lender.
Yeah, and one of the follow-up questions regarding that had to do with, would the loan go faster if the lender is a preferred lender?
So this is Eric. I can speak to that. The short answer is usually yes. What a preferred lender is a lender that has demonstrated a certain aptitude or a certain level of competence in underwriting and approving SBA guaranteed loans. So we allow them with oversight to operate independently or with delegated authority, where they could do their own approval and offer an SBA guaranteed product without SBA's full review. So typically that is a faster process than the loan being underwritten by the lender and then them submitting it for the SBA to also co-review. So the preferred lender program or POP lender program lenders typically can turn around a loan application faster.
Okay. What is the estimated time when disaster loans will be ready to fund if approved?
So again, this is Eric. With respect solely to the Economic Injury Disaster Loan Program, the disaster loans that are available right now that you can apply for right now, the historical turnaround time has been between 21 and 30 days. Now, as of yesterday at about 10:30 p.m., the Office of Disaster Assistance is reaffirming that is their expected turnaround time between application and disbursement of funds. So that's really the best estimate I can give you on that at this point.
Okay. So are regular payments to contractors for maintenance and repairs of actively managed real estate businesses eligible for this loan forgiveness under the proposed legislation?
So under the proposed legislation that's yet to be determined, under the Economic Injury Disaster Loan Program, the answer would be if it's a real estate investment, yes. If it's property development, probably not. So if it's new development, those are typically not eligible. But if it's existing real estate that is, like apartments or other non-owner-occupied real estate that a landlord is managing, that landlord can apply for assistance to the Economic Injury Disaster Loan Program and be supported in making regular payments to their ongoing accounts payable.
Okay. Should I be getting an SBA loan and also a grant from FSSA or just one?
That's a fantastic question. So I would encourage you again to apply for the Economic Injury Disaster Loan Program if you're a business owner. We don't know exactly what the full breadth and depth and the scope of the response is going to be from not just the SBA, but from the consolidated federal, state, and local governments. There are a number of proposed programs underway, not just at the federal level, but at the state level and at the local level all across our country. What's going to be the best fit for your particular need, it would not speculate on. I would say that it makes sense to avail yourself of the resources that you know are available now, understanding that you may have a better opportunity down the road.
Yeah, and I would also say, as it relates to the economic injury disaster loan, just to reiterate what Eric said earlier, you don't have to take this loan. So, I mean, I think if you go through the process, which I agree with Eric, go through the process, submit the application, because then it will be a tool in your toolbox if you need it. See what you can get approved for, because it may be the case that something you don't anticipate in the next couple of weeks. Sound familiar? We've not anticipated a lot over the last couple of weeks. May come to pass that would make this an option where you would have wished that you had applied 2 weeks ago. And so I think there's no cost to apply other than your time. And you don't have to take the loan if you're approved for it, or you can take less than what you're approved for. And so I think that's an important point. The other point I would make too is talk to your local units of government and economic development organizations, because right now there are a lot of local groups, counties, economic development organizations, Main Street organizations, chambers that are rolling out or have already rolled out new and innovative programs to help the small businesses in their county. So I'll give an example. Grant County has repurposed their revolving loan fund from USDA to give out small, we're talking, $7,500, so under $10,000, to help small businesses get through this time of worry. But, I would say look at it as a toolbox. There are a lot of different tools in the toolbox. Some things are better for certain expenses. Some things will be needed for others. But this is one, and any additional programs that come out will be others. And so that's, from a business point of view, have diversity. Don't be relying on one financing vehicle to save your business.
Can a startup business, this is projected to open at the end of March, get aid or a loan?
This is Eric again. So the answer is probably. Essentially, what the requirement is that the business was formed prior to the disaster declaration. and have some fixed expenses. So in other words, if it's conceptual and you've filed and created the business, but you've had no fixed expenses, no AP, no commitments essentially for ongoing expenses, that's going to be a little tougher to get approved for. But if you form the business and have signed a lease and have agreed to hire people or agreed to buy product that you either have taken delivery of and haven't paid for yet, or haven't even taken delivery of yet but committed to buying, then the answer is probably yes.
Okay. What funding that's not a loan is available if we need to shut down temporarily?
This is David. I can take a first stab at that. Really, the only thing that's available at the moment that's not a loan would be a local program. And some of those are grant programs. Most of them are also loan programs. So as it relates to your business. Now, obviously, if you shut down temporarily and you have workers who need assistance, then we have certainly state unemployment. You would work with the Indiana Department of Workforce Development, and they've been doing a lot to try and, normally in Indiana, we've got a 1-week waiting period before somebody can claim unemployment. We're working or have already waived that requirement so that people can file for unemployment as soon as possible. But at the moment, the only funding programs that I'm aware of that are not a loan would be something at the local level. And we've got 92 counties in the state of Indiana, so it would be best to go talk to your county chamber or economic development organization. I don't know if outside of that, we're talking crowdfunding, or like Facebook is supposedly giving away several $1 million, in grants. You can try applying for one of those.
And I saw GoFundMe also has a micro loan or micro grant available.
Yes, I've seen that one as well. And if you're in Indianapolis, for example, I know that the LISC Indy, which is a local organization focused on kind of community development, they've partnered with a online, I don't want to call it a crowdfunding, but it's essentially like a quasi crowdfunding lender, but it's Kiva, Kiva, and that's through LISC Indy if you're located in the central Indiana area.
Nice. All right. What is there to help manage payroll during this time? I think you covered it a little bit. Anything else you want to add regarding payroll, either of you?
So this is Eric, and I would say, again, just to kind of streamline stuff, I think to David's point, it makes sense to check your local resources. There may be something available in your area that I'm not familiar with. Absent that, I would turn to your lender of choice and ask them to help you provide, or help them, ask them to help you provide some short-term working capital so that you can continue to make payroll, with the understanding that that short-term funding is going to likely be paid off with some more permanent solution after the full response is formed and implemented on the part of the government.
All right. What are my options if I employ less than 50 people? I think you covered that also, but same answer?
Yes, sir.
All right. Next slide, if there is. All right. Other questions. So from email. So what is used to determine the monthly average payroll? What past period is used to determine the monthly average payroll?
This is Eric. To be frank, that's determined by the underwriting process that the Office of Disaster Assistance will impose. I think it's typically your past 6 months payroll. We know that there are some businesses that are seasonal, for example, though, so maybe it doesn't make sense to look at the last 6 months, but maybe it makes sense to look at the same period from last year, and that's more representative of what the expectation is. So it's going to change a little bit from borrower to borrower, but essentially they're going to look at your historical and make a determination based on that.
Okay. What all is included besides wages?
So this is a tricky question, and I would actually defer to my good friend David Watkins to maybe speak to this to a greater extent. What the SBA is trying to measure is the extent of the economic injury to your business. So wages is an obvious one, but there may be lost sales. How to demonstrate that and document that is a little slippery, so you may need some technical assistance to get that done. The SBDC is a great place to get that resource.
Yeah, I mean, and so that would, I mean, it does go far beyond that. I mean, even all the way down to, we've got small businesses that, they sell to school districts, right? I mean, they're food provider to a school district. School districts are closed. So we're using, say, the school district announcements of their closures to justify the economic injury. So as Eric pointed out, the economic injury disaster loan can go for a lot, like payroll, AP, any fixed debts, that kind of thing. And so being able to show that loss or that economic injury, maybe if you're a retailer, it's the number of people that have visited your store. If you're a manufacturer, it's the number of employees who have had to stay home because their kids are home from school or because they're not feeling well. So there can be a number of different avenues to explore exactly what that injury is and help SBA, understand what size of loan you would possibly need.
Yeah, I received a question regarding business valuation. That is there going to be how are you going to quantify the injury? You're not going to require any kind of pre and post valuation work, correct?
Typically not, Ed. I mean,
Yeah.
in terms of business valuation, we're not necessarily looking at the total enterprise value. For the purposes of disaster assistance, we're really looking at the economic injury based on lost sales or lost revenue,
Yep.
or other sort of fixed expenses in the absence of revenue that a business might experience, not so much
Yeah.
the overall enterprise value.
Yeah. And I mean, and so then it becomes helpful though to do some comparative analysis. Hey, in March of last year, my business made this much, and in March of this year, I'm projecting that it will make this much. Or in April, I had 12 events booked at my event venue, and now I have 0. And having that comparative analysis so that the SBA loan officer with the disaster assistance office can see that themselves and
Yeah.
understand what it is that has been lost. That's really what they're looking for.
Yeah, that was along the same lines of what I said. I mean, I can't envision that anybody would require that, but nevertheless, I thought I would ask. What happens if additional funds are after this initial wave of loans come through? What happens if there's additional funding that's required?
That is a fantastic question. So we don't have 100% transparency on how this is going to unfold. What I can tell you is every consideration is going to be made to assist small businesses as we move through this crisis. So we're phasing in solutions. Frankly, we're phasing in the solutions that we have available right now, and we're building new tools to help address the need as it evolves and develops. And we've come to understand how we can be most impactful. There's going to be consideration given to or examined as we look at aid that's already been assisted with or aid that's already been given compared to new programs. I think the intent here is to be, kind of err on the side of being generous in the sense of providing the full breadth and scope of relief that's going to become available later.
Eric, correct me if I'm wrong, though, specific to the economic injury disaster loan. If, say, I initially apply and work with the SBA to get a loan at a value of $1 million, and this thing kind of keeps going on and we're still closed, and I realize that I need an extra $200,000, can I go back to the SBA disaster office and get an increase on that?
You know what, David, that's a great point, and you're absolutely right. So yes, you can absolutely go back and request an increase with substantiation. So if you're approved for, say, $1 million today based on your documentable economic injury, this thing drags on further than we expect it to, and down the road you realize that another $200,000 in additional funding not available through conventional lenders is going to be required. You can absolutely go back and ask for an increase on that economic injury disaster loan.
All right. Let's see. Back to the email. My understanding is this is via banks in the SBA programs. Is that correct? I don't. I think you said that it was. You have preferred lenders as well. You should go to your lenders as well as directly to the SBA. Correct?
Yep. So let me restate. So there are actually two vectors or two channels, two ways to approach this economic injury or the support of the economic disaster recovery. One is, yes, through your conventional lenders. They are, for the most part, awaiting pending legislation to take advantage of some of the proposed enhancements to SBA lending. So although we are encouraging our lenders to make bridge financing for the immediate needs, so if you need to make payroll tomorrow and you don't have the cash, your lender should be able to help you with interim financing to help you meet that immediate need. That's not going to be part of the longer-term SBA-supported solution to get to the recovery of this economic crisis. So it's short-term financing to your traditional lenders. There is long-term economic injury disaster loan funding available directly from the SBA right now. And the reason for that, frankly, is that that's the tool we had in our toolbox when this unfolded. We're having to develop new tools to respond to this unprecedented event.
Okay. These next few questions are related to forgiveness. Do you want to look into the crystal ball, or do you want me to move on to other questions?
I am not going to speculate on loan forgiveness. I suspect that some shape, form, or fashion of loan forgiveness is going to be part of the final legislation that's enacted. I understand that there's this concept of having, some portion of funding be a grant right now, and then some portion of funding be some portion of the overall funding package be a forgivable loan, provided that those two aspects are used to support payroll. That is speculation at this point, not enacted. I expect that there will be some form of that, but we can't say exactly what shape that's going to take at this point.
But as far as application, it should be made, if as soon as it's available, you should be applying for it, correct?
It's going to be a big line. You want to get in it.
Yep, I get it. Okay, we can't answer that. All right, let's move over to the chat. Any consideration for newer startups that had limited payroll in 2019? I think you said go ahead and apply that.
Yep.
That it
Apply.
would qualify. Mm-hmm.
Yeah, apply.
David, why don't you speak to how what you're doing to help them have more projections to show what the economic injury is in the case of payroll that's not yet booked?
Yeah. So explicitly, actually, we've been on calls with the disaster office that they're encouraging startups from late 2019 or even early 2020 to go ahead and apply. Again, once you get with the loan officer there, and this is where the projections become really, really key, right? I mean, there may not be a comparative period, right? So we can't go from March 2020 to look at March 2019. Or there may not be 6 months worth of sales to say, okay, you average this much a month, April should have been X. And so that's where it really becomes key to have well documented. Here were the contracts we had, right? Or here were the sales we anticipated. Here are the customers who have shut down because of this pandemic, and to be able to walk the loan officer through that process. We can't, obviously, I can't make any promises on what an individual loan officer will do or what the SBA disaster office will do, but they have been explicit in encouraging startups to go ahead and apply, understanding that they're going to be relying on your projections, which essentially comes down to your ability to demonstrate injury and your ability to demonstrate that you can repay the loan at a later date. Right, so that's ultimately what it's going to come down to.
Okay. Next question is: I sent an online application through the SBA through their email. Do I need to send it also through the mail?
The short answer is no. So if you have applied online or via emailing the Disaster Loan Center, a hard copy mail version is not going to be required. Not for the initial application. I say that with this qualifier: if they're asking for additional documentation, and say it's a tax return and we have a really big tax return, you may need to consider mailing that simply because document upload size, I think, has been improved significantly, but may be limited depending on your specific case.
Okay. Mandy asks, and this is a big one. We have 17 applications started and are extremely close to being completed. We are unable to log back into our account. Do we need to start over and paper apply, or will we be able to log back into our account?
So, listen, I'm going to be perfectly frank. I don't know the answer to that question. I am aware that essentially the original web application portal, frankly, became overwhelmed with the amount of volume that it was experiencing. And we realized, by we, I mean organizationally, realized we didn't have sufficient resources and a process that would accommodate the volume of applications that we have. We're told that they're going to be able to relaunch the original portal and should be able to re-access those applications at some point in the future. That's not today. And then when that's going to be, I can't tell you. If I were in that position, and I know this is not the answer anybody wants to hear, but if I were in that position and I was concerned about getting myself into this line to get funding, I would go back to the new portal. I'm going to do the fillable PDFs and upload those through the new portal. Again, there's no cost. There's some duplication of effort, and I recognize that. But I think given the option of waiting to see what solution our IT folks come up with or reapplying, I would personally reapply under the new process.
And while you start that, I would also say go ahead and call the disaster assistance office phone number that Eric has in his slides. Again, long wait time, but if you're sitting there going through some of these application materials, again, go ahead and just hop on the phone. We have had clients get through and actually talk to a person at that office, and and given the situation, an understandably reasonable amount of time.
Okay. These next two, Lindsay and Vic. So this is regarding the slide deck and Eric talking too fast and Lindsay not being able to hear Eric. Again, we will make this slide deck available. The webinar in its entirety is being recorded in two separate places. So the video, everything that you're hearing is going to be the webinar in its entirety will be uploaded and available. As well, it will be the audio will be on our podcast, Defenders of Business Value. So if you missed anything, don't sweat it. We'll do that, as well as we probably can get this transcribed for you if you need it. All right, next question. Do I apply locally in my city? The address to send the application is in Texas.